So there are a lot of people in this world, those who trade based on only price action, but there are some of the mistakes which those people make based on which either they make small profits or they make big losses during their trading journey. And in this particular video, we are going to understand and we are going to break through all those resistances based on candlestick patterns, because a lot of people start their trading journey based on only price action, but they don't understand the importance of candlestick patterns. What is the meaning of this particular candle, that candle, based on which they incur a lot of losses. And in this particular video, I'm going to break through all those things and you will get the absolute clarity on what is importance of candlestick patterns. And along with that, I'm going to share different kind of candlestick patterns based on which you will be able to understand what is the meaning of which particular candle. Hi, my name is Sahil Popli, founder and CEO of The Achievers Club, and I'm on a mission to help 10 million people in order to create multiple sources of income and achieve financial freedom using technical analysis in stock market. And in this particular video, I'm going to share the in-depth knowledge about what are candlestick patterns. And in the previous video, we discussed about how a green candle and a red candle is formed. So if you haven't yet watched, make sure you watch the previous video, which I shared in the Technical Saturday series itself. And the link to that particular video will be given below this particular video in the description box. So let me quickly share with you the presentation and let's begin with the candlestick patterns. And I want you to take complete notes because every single nugget can shift the whole dynamics, how you trade based on price action. So the first kind of candlestick pattern, which is very important for us if we trade based on price action, or even if we apply some of the tools like RSI, Bollinger Bands, and so on. So the first kind of candlestick pattern, which is very important and which we have to keep in mind, is a big body where the difference between the opening price and the closing price is very big. And similarly for red candle as well, the opening price and the closing price, the difference between both the price is very big. And for that particular candle, and right now for this particular video sake, I'm going to take the example of only daily time frame, based on which it would be very clear for you to understand the examples as well. So let's take an example that for the whole particular day, the opening price was around 100 rupees. And from that point of time, it made a low of around 97 rupees. Like the lower shadow and the upper shadow is very small, based on which the closing price is above 120, which means this is just for the sake of example, based on which you can understand that the price of the shadow is very less as compared to the body, based on which the difference between opening price and the closing price, and vice versa for the red candle as well, that's very good. And based on which, if this particular big body is formed within the uptrend, which means this depicts that the uptrend is very strong. And similarly for the downtrend as well, if there is a formation of lower tops and lower bottoms and the price is moving on the downside, forming a downtrend, if during that particular downtrend a big red body is being formed, then it depicts that the downtrend is very strong. And on the opposite side, if after an uptrend, if a big red body comes, which means after a confirmation, there is a probability that it can change the trend as well. And similarly, after a downtrend, if a big green body comes up, based on which after that particular candle, if we get the confirmation, then the probability of trend change, that is from a downtrend to an uptrend, is very higher. So this is like a theoretical explanation found when bulls and bears have a strong control, because if the open and high, the open and closing price have a very big difference, which means bulls are completely in charge. If the opening and the closing price is having very big difference in the form of red candle, which means bears are having a very, well, like you can consider a good charge on that particular day, which depicts a strong uptrend or a downtrend. Next is doji, where this is also, you can consider a candlestick pattern which is most important while having trend reversal. And doji is formed when on that particular day, because as I've already mentioned that we are taking the example of daily time frame. You can take any of the time frames like weekly, monthly, then hourly, 15 minutes time frame. But for that particular candle's sake, let's consider on a daily time frame, if the bulls and bears tried to take the charge of that particular day, which means that from opening price, the bulls took charge. And after some time, that is maybe in zone 2 or maybe in zone 3, then the bears tried to take charge. But at the end of the day, the opening and the closing price of that particular stock was completely same, based on not every time it is going to be same. Sometimes it can be 1 rupees, 2 rupees difference as well. But it is like an indecisive candle based on which bulls and bears are not able to take charge. Like they are not able to decide whether the trend is going to go on the upside or on the downside. So this is like a theoretical concept, indicates an indecisive between bulls and bears, and the trend change confirmation comes on next trading day, based on which, as I've already mentioned, if after an uptrend, an indecisive candle, that is doji, comes, and after a doji, if we get the red candle, based on which we should be alert that from this point of time, there is a probability of formation of a downtrend. And similarly, after a downtrend, if doji comes and after a doji, we get a green candle, then we can get the confirmation. Then we have got the confirmation that the downtrend has came to an end. And from this point of time, uptrend can take place. So this is all about doji, a short glimpse. Next comes the candle pattern called as hammer, based on which, like, a green hammer is where the opening price is here. Let's consider at 100 rupees. From that point of time, it went very down. Let's consider it went almost around 90, maybe 85 as well. And then bulls are taking charge once again, which means bulls were already in control, but bears tried to take control on that particular day. But again, bulls took the control, and the closing price is again higher as compared to the opening price, based on which there is a formation of a green hammer. Similarly, the red hammer is also being formed, but the most important hammer which is being formed is like a bullish hammer, based on which this is also a kind of a reversal pattern, based on which if after this particular candle, if we get the confirmation, then the trend reversal can also happen. So this is a theoretical concept formed when the price of a stock moves significantly lower after the opening, as I've already mentioned. After opening, the bears can take charge, but then rallies back to the close above the opening price. The closing price is above the opening price. That is how a green candle is formed. Indicates that the bears tried to push the price lower, but were unable to do so. And the bulls took control and pulled the price back up. This is like the, in simplest manner, I explained already. Next is a shooting star, opposite of hammer, which means like this is a bearish, you can see, because the color is red, based on which you can automatically understand that this is a bearish candle, based on which, like, the opening price is higher as compared to the closing price, but like the overall perspective is bearish. But on that particular day, the bulls tried to take control. They formed a high, and then although like the bears were already in control, they were already in charge, and then they pulled back the whole trend, and the closing price was below the opening price. And although on that particular day, the low can also get formed, based on which this is like a opposite of hammer. And similar is the explanation that formed when the price of a stock moves significantly up after the opening, but then rallies back to the close below the opening price. Because if the closing price is below the opening price, that is like how the red candle is being formed. And it indicates that the bulls tried to push the price up, but were unable to do so. And the bears then took control and pushed the price back down. Next is bullish engulfing. The best example which I can ever give for the bullish engulfing, and even this is one of the example which I give in my community as well, that after a downtrend, and even while I explained in the form of big bodies itself, after a downtrend, if a big body comes and that particular big body candle, the candle which is having a very big body, is greater than the previous red candle, then the probability of a downtrend to get over and the uptrend to get started is very, very higher. After a downtrend, if a big green body is formed, based on which the whole bears were in charge since last so many days, but now bulls have taken a lot of demand, like bulls have taken a lot of charge in the market, based on which a big green candle is being formed, and after that particular zone, the uptrend is about to get formed. So this is how the bullish engulfing, like the bears took charge and the bulls have engulfed. Right, so this is like a basic explanation, and this is the theoretical, indicates a potential reversal from a downtrend to an uptrend. And opposite is for bearish engulfing, which means after an uptrend, if a big red body is being formed and red body is bigger than the last green candle. If a red body is bigger than the last green candle, based on which that red candle engulfs the green candle, that is called as a bearish engulfing. And this particular candle pattern indicates a potential reversal from an uptrend to a downtrend. Next is spinning top. This is one of the most interesting candlestick pattern in you can consider the whole bunch of candlestick patterns, based on which, if like it can be formed in the form of bullish as well as bearish spinning top as well, based on which for that whole particular day, there was very good volatility on the upside as well as on the downside. But the difference between the opening price and the closing price is very, very less. As I already mentioned in the form, like at the point of time of doji, that the difference between opening and closing price is very negligible. But at the point of spinning top, there is some difference between opening price and closing price, that is opening and the closing in terms of green candle, opening and closing in terms of red candle, and high and low for that particular day is very, very big based on the volatility. And that's the same scenario which we saw on the day of election in 2023. That was a very big candle based on which there was very good volatility on the upper side, that is on the bullish side as well as on the bearish side. But the market was unable to decide that what trend to go, like in which side we should go for, whether we should go for the positive side or whether we should go for the negative side, based on which it formed a spinning top. And after that point of time, once we get the confirmation on the next day or maximum 1 or 2 days, because the confirmation has to happen within 1 or 2 days, otherwise the confirmation will not make sense, right? So that is all about spinning top. This is formed when the real body of a candle is small and is surrounded by a long upper and lower shadows, indicates an indecision in the market. And this is the theoretical explanation of it. So these are some of the basic candlestick patterns, and I hope that you have got absolute clarity on what are the different candlestick patterns. These are, you can consider like very, very basic. And if you're starting off your trading journey, and even if you're someone who is already into trading profession, but still you are unable to understand what is the importance of this candle, that candle, what is spinning top, what is doji, what is big body, and so on, this particular video, like whatever I've explained right now, that is going to shift the whole dynamics. And along with that, it will give you the absolute clarity on like when to book profits and when to cut losses and so on. And mark my words, if you understand price action in depth, if you understand basics of candlestick patterns, then also it is more than enough based on which you can start creating big profits and you can cut your losses very small in your trading journey. I hope that you have got immense value from this particular video. I'll see you in the next video of Technical Saturdays, and I'll see you tomorrow, that is on weekly mastermind session as well. Till then, live fully, love openly, and make the difference today. I wish you joy and abundance in all you do.